I mean,
Ladies and gentlemen, welcome to the
non-Christmas podcast.
It's not a Christmas podcast, but Steve had stopped me from putting up some Christmas cheer in the background.
Keep one of them on.
It's the 12th.
All right. Well,
look how nice this is.
It's also December, Steve. We should figure out when we're doing our Christmas episode, Tanner.
Yeah. And by the way, I got to start planning your gift.
You're not giving me anything.
No, I'm giving you it. I'm going to make sure we're partnered.
No, I'm not accepting a gift from you this year. I didn't have a gift last year. No,
dude, you don't even realize how well Joby has performed.
I do realize it. I'm against.
I have an idea.
The gift.
I will get Tevis. Tevis can get my gift, and you and Roy can exchange gifts.
Oh, so we just go back and forth. It's got to be a circle. Steve, I'll get you a gift. I know what to get you.
You're not getting me.
We'll figure it out. No, we'll figure it out because I think Chris is going to win in terms of the performance, and so he gets to choose, right?
I don't think he'll be participating this year.
Chris can't participate.
He can't participate. It's not like he's going to give SoFi to anybody.
Doesn't matter.
Yeah, but I don't think he can talk about stocks right now.
He can't associate with us.
Yeah.
All right, fine.
I'm not trying to get in trouble.
Is it just the four of us?
Just the three of us. Roy's not coming.
No, I mean for the Christmas thing.
Yeah.
Or is there anybody else?
We think Roy is sick. Well, I don't think we think that. I think he messaged us, but he's sick. He might show up if he's feeling better, but most likely he's down for the count tonight. But yeah, I just checked. Joby, even though it's had some rough performance recently, it's still up 80%.
Uh-huh.
What did yours do?
Check.
What did you give?
I gave lemonade.
Did you really?
Yeah.
All right, that might have been fine. All right, whatever.
What's it at?
109%. Who cares?
Oh, that's interesting.
Who cares? No one can. It's 29% is a rounding error, dude.
Check Unity this year. Kind of curious.
This is what you gave me last year.
Yeah.
134%. Sorry, 138. I don't even know why I
Bro, if I gave you Unity.
Sorry, no. That was it was wrong. It was 83%.
Oh. 83% is still I mean it's not Joby, yes, but
it's outperforming Joby. But all right.
Yeah, we need to okay, so it's gonna be the four of us. Was it just five of us last time?
Yeah, it was 5 total. Okay. There's a company you guys should look at. It's called QXO.
That's what he's giving us. That's what Steve is going to give somebody for Christmas. I guarantee you. I'll put a side bet on it right now.
Make a prediction market.
Look at his laugh, man. Look at his smile. He knows it's true.
I wasn't even thinking that, but that was a good idea.
Tevis, I might gift you Nebius. Who knows?
I already own it, bro.
I can still give it to you.
Can't
I have to. So I have to own it, and you can't own it. Steve owns everything.
No, that's not. No. The only rule is you have to own what you are giving. That's the only rule.
But like,
if I get paired up with Steve,
a minimum of $1,000. You can't just like buy it one share to give me however many shares.
I would buy $1,000 of Joby to give it to you.
So malicious, man.
And I'd have $1,800 at the end of the year. I don't know. What are you complaining about?
It's so out of pocket. What the fuck did I do to you, bro? We were friends.
I'm making you money, dude. Okay, Steve, if I get paired up with you, immediately shift for. That's the only company I know that you don't have that deserves to be in your portfolio. So just so you're aware, that's what's coming your way if we get paired up. Cool?
I don't really have a choice in the matter.
That or Chime, I guess. I could give you Chime too.
This guy's a menace, man. Like me and Steve are gonna be hoping we don't get Tanner.
100%.
Okay, so when do we want to do the actual show? There's how many Fridays are there before from now?
We can do it next week or the week after.
So we can't do it the week after because the week after is Boxing Day.
Thank you, Jonathan. Appreciate you so much. I will be adding QXO to the community port. I can't add it to my personal portfolio.
Well, hold on. Tevis, what did you say? It's Boxing Day?
Well, correct, because today is the 12th. Next Friday is the 19th. So we should do like a Christmas episode, whatever. And then the Friday after that is the 26th, Boxing Day. And then the one after that is the 2nd of January.
Yeah. I'm asking, what is Boxing Day?
The 26th?
Day after Christmas.
But what does that mean?
What?
Boxing Day. What does that mean?
Do you guys not have it in the US?
I have no freaking clue what you're talking about.
Do you guys not know what Boxing Day is?
No, you just made me think that's when Jake Paul is fighting freaking Joshua, but I know it's not.
It's
a lot of people I think are confused. So it's like no, okay.
It's a holiday that's celebrated after Christmas Day, and the idea
Why not just celebrate Christmas Day?
Well, the idea behind it was to donate gifts to those in need, but it's become like a big like sales day. It's become like
it's like a Black Friday after Christmas.
Yeah, pretty much.
Okay, so we can donate and still do a show.
Well, it's after Christmas. We're doing a Christmas gifting.
Jonathan, brother, seriously, thank you so much. 10 more people are going to be able to watch the live stream after. So the members only live stream now, which is quite interesting. Right after this, we're going to immediately start streaming. It takes us probably about 2 minutes to set up, but we'll rush into it. I think we'll be a lot faster this time. But it was very nice having the live comments in our after hours this time.
All right, I'm still confused. So why can't we do a stream on the 26th?
We can. Here's what I think. I think the 26th.
Bro.
Oh, look at that.
Jonathan Price with the 60 gifted.
Jeez.
Look at that.
To join the live streams afterwards. That is unbelievable. Jonathan, all right, I'll add QXO to my personal portfolio.
You better freaking add it at this point.
Jeez. I think, Steve, we save the 26th as like a New Year's stream, like New Year's predictions and whatnot. And then we can do the 19th as a holiday gifting stream. And so that way you're ahead of whatever.
Problem.
Okay.
Jonathan's not Dookie Pie. Jonathan is Jonathan. Maybe it's Dookie Pie's husband. Who knows?
Whatever happened to Dookie Pie?
I didn't know that's really what I just learned today, that Boxing Day is a Canadian thing. Did you know that?
Apparently
I had no clue. Boxing Day is literally, I don't know why they call it Boxing Day. I didn't actually know that it was tied to a charitable giving type thing. I just thought it was like Black Friday. It was like it's always a sales day. You see companies come out and they promote having things that are 60% off. Like it's like, people run through the doors and try to grab everything that's left.
Yeah,
the same thing as Black Friday.
That's
how it started, was like charitable donations, because it's like leftover gifts from Christmas and whatnot.
I guess it's a British thing as well. All right. Yes, let's talk stocks. Steven is right. I'm over the I'm over it.
26 is supposed to be the first day of the Santa rally.
Okay. SoFi. Can we jump into that? So SoFi has been pumping out new products recently, like at an unbelievable rate. Essentially, I did a little count going through all the new products, like real usable. Not all of them are revenue generating. There was a full update to SoFi Relay that's not necessarily revenue generating, but either fully updated products or new products in general. 12 new products have been added in Q4 alone. What do you guys think about the size of these new products? So we have crypto, we have remittance payments like instant transfers, L1 options, like all these different things. What do you guys think that this means for Q4's revenue? How much do you think is actually going to be accumulated and added this quarter? That's sort of the question that I've been pondering recently. Steven, I'll start with you.
I don't know if I want to go after you with you using fancy words like pondering.
I know. I have a thesaurus right beside me. That's why I'm up to date these days.
I wouldn't be surprised if you have it open on another screen.
I really don't. It's just
Bro,
pondering, dude.
what was that word that you used once so he made fun of you for?
I know what it is. Scuttlebutt.
Scuttlebutt.
You like that? That's memory right there.
That was like from 2 years ago.
Yeah, that scarred me that day.
So which new product do you want to talk about? The secure card? Is that what you want to talk about, Tanner?
Secured card, L1 options, crypto. These are all, new products are going to come to SoFi for those products. They're going to generate new profits. The smart card, every customer that now is going to get that smart card needs to pay $10 a month. What does this mean for revenue, bro?
I'm more interested in L1 options and crypto than that card. I don't think that card's going to be a huge thing. I think it's going to be a flop. I hope it's not, but I think we'll get more reoccurring revenue out of options and crypto.
Yeah, I was just going to say, everybody who gets that card has to pay $10. What does that mean for revenue? It's like, it means that not a lot of people are going to buy that card.
100%. It's
a massive barrier, but it's just part of the slow rollout.
Yeah, but it's not just the card is $10 a month. That's an oversimplification. You get 4.3% APY. You're getting unlimited financial planning access.
But it's like a card to build good credit. I mean, they're giving you 5% on groceries. Somebody who actually benefits from 4.3% APY is not also the person who needs to build good credit, who cares about the grocery. Like, the person who actually benefits from 4.3% APY is going to put $100,000 on there in the savings account or whatever and keep it safe to actually fully capitalize. The person who cares about the 5% on groceries and wants to build good credit, generally speaking, won't have a wealth that they can just dump into savings passively.
Yeah, I think that's fair. It is kind of weird that the secured card that is going after, sort of the people who are building credit. I'm just repeating what you're saying, but honestly, I do believe it. Jonathan Price with the 10 Steven Fiorillo memberships.
Thank you, Jonathan.
John's one of the gems for sure.
So to add on what Tevis was saying, I'm going to push back on one aspect. The 5% on groceries, depending on how big of a family you have, could be substantial. I mean, look, Hager's got 4 or 5 kids. His grocery bill's got to be huge. I mean, if you're spending $800 a month on groceries, which is not anything crazy for a family of 3 or 4, I wouldn't think. You're talking about $480 back a year. So it's substantial. Now, Tanner, what is the rest of the rewards on it? Is it 2 or 3% on everything else and 5% on groceries?
Nothing on everything else.
Nothing on everything else. So it's straight up just groceries you get the benefit on.
Yeah.
Then that is a horrible card.
Yep. Agreed.
Horrible. Because you can get, if I'm not mistaken, an Amazon card, get 5% back on Amazon, but you also get something back on everything else, or Robinhood, 3% across the board. I mean, if you're getting 3% across the board, you're going to make more in points or cash back than just 5% on groceries.
Yeah. Thank you,
That's
John.
a net loss right there. Like, that's not interesting.
Yeah, another 10 gifted to Tevis.
Yeah, thank you so much.
That is 80 new people that are going to be watching the live stream tonight.
That's going to be a fun live stream tonight. Yeah.
Yeah.
I agree with Steve. And it being so skewed to just one side just means that people who do, the few people, relatively speaking, who do adopt this card are going to have it as one of many cards that they only use for groceries for that specific reason.
And we still have to figure out if you're getting a free run on your cash for the month, or is it drawing it down?
No. So this is what's interesting. I've been looking into this. I actually think it's not, and someone from SoFi has not given me the full answer on this. So if you guys are an employee, please step into my DMs and let me know. I'll keep you anonymous. But I think it's actually not just a secured card, because there is a screenshot that SoFi ended up showing off that says the amount that you have in your balance, which means that it stays in your account. So you are still building interest on it. That's guaranteed. And then they also say auto pay is on. Well, my question is, can you turn auto pay off and turn this into a real credit card? That's really
why not just go get a real credit card that you don't have to pay $10 a month for?
Well, I don't know if you'll be able to. It's not a $10, like that's the confusing part. It's not a $10 a month card. It's a $10 a month for SoFi Plus. SoFi Plus is going to get you that 4.3% APY. You know, the card as well.
You are a shareholder of both Hood and SoFi. I believe Tevis is a shareholder of both Hood and SoFi. If you had the choice of, I believe Robinhood Gold is $5 a month, correct?
Yeah.
What is better? What is a more, not better, but what is more bang for the buck? Robinhood Gold or SoFi Plus?
The Robinhood Gold, but it's also a good card for people who can't get a credit card. You know? So if you have a really low FICO, the gold card is not even an option for you. But the Hood Gold card, I absolutely would choose over the, you know, grocery thing. Like, I don't even buy groceries. So
how do you not buy groceries?
Well, I mean, I do, like, we do buy groceries. I was just showing you, I was eating a snack before. Like, I mean, I do buy groceries.
Right. Like, obviously you buy food. That's considered a grocery.
I was just showing you I was eating a snack. I eat like you humans do.
No,
yeah, of course.
No. Okay. So what I mean is, you know, I'm eating 2 meals a day now, and those are pre-prepped every day. So I'm not buying groceries for those. We don't cook in the house.
Right, but that's still considered groceries. You're buying food.
No, but I don't think it does. Like, for example, I heard that if you buy at Target and Costco, that does not count because those are warehouse things. And that's also where we get our groceries from.
Well, that's ridiculous because that's where people buy groceries from sometimes.
I agree. I don't think it's a very thought out card.
Hey, Anthony Noto, come on the show.
Well, I think that's an interesting point though, right? Because like, if Walmart and Costco count as grocery stores, great. I'm gonna get some home hardware and a new T-shirt and pants. It's like, you know, I think it should be like purely grocery stores, you know.
Okay, but think about what you just said. I can go to any regular grocery store, Kroger, and go buy pots and pans and that type of stuff too.
Yeah, can you buy a flat screen TV at Kroger?
No, but some of the other
stuff at Costco.
Just saying.
You know, I think like if it has an electronics section, it's not a grocery store.
Yeah, but you should be able to, like, this is where payments is not really thought out yet. They should be able to see what is a grocery store purchase. I mean, Costco obviously has a massive, you know, Kirkland's a huge brand.
I mean, everything gets scanned in for the bill. They should be able to determine what you're spending on everything.
And we're not quite there yet, but maybe one day.
Should be.
That's always been my biggest like idea. And I know that some companies are trying to crack this, but I don't think there is actually one yet. But for the people who have a bunch of credit cards, like a 3% cash back, a 5% cash back, you know, high points for traveling and everything, depending on what you tap, you should just have like your phone tap this thing, it understand what the transaction is, and then choose the card that has the highest rewards. When do we get that? When does that come out? Because then you wouldn't need to, oh, you know what, I got to get my 5% card for groceries and all these sort of things.
I just don't think that this is a product that's going to benefit us the way other areas would. So it's not interesting.
Yeah, Costco doesn't count as grocery. Yeah.
And I'd argue that it should because people spend more money at Costco than regular grocery stores on actual food.
Then that'd be interesting because it's like a subscription to shop at Costco and a subscription to have the SoFi card just for 5%. You're going to be dropping like 10 grand a year on Costco minimum to like make that card worth it. You know?
Okay, so I asked ChatGPT what the annual spend in the United States for groceries was, and they said on average it's between $6,000 to $8,000 a year. So you're roughly returning $300 to $400 a year by spending $120.
Okay,
if you
now,
do all of it on that card and if all of it is eligible.
and now ask it, what is the average spend on a credit card per year?
It's going to be significantly higher.
Obviously, it's going to be significantly higher. Like, how much do people put on a credit card a month? And then think about when you put 3% cash back on the entire nut from Robinhood.
I mean, it's actually not much higher than you'd think. Essentially 9,000 to 11,000 per year of credit card purchases.
I'm not
Depending
buying,
on the credit card group.
at all. There's
That's like
no
double.
way. No way.
It's almost double, like 6 to 11.
Sorry, 6 to 8 versus 9 to 11.
Yeah, so like 50% more.
This is the average person, Steve. You know,
I'm just saying that I think most people use their credit cards for everything. From electric.
but
bills to
what's the
everything else.
average income in the United States?
I'm just thinking about what the average monthly bills are for most people.
What do you think that is?
Yeah, but you're not putting your rent on a credit card, dude.
No, not rent, but you.
$1,200 a
Well,
month.
hold on. Cell phone bill,
Okay, keep
electric,
going.
cell phone bill, electric, gas,
Sure.
groceries. If you have a car payment, you have insurance.
You know, it's so
There's a lot
funny.
of things that you wouldn't think of. That adds up.
I asked it, what's the average income in the United States? And it said, average annual salary for workers in the United States is often cited as, between 59,000 to 65,000 per year. And the source that they gave me was a 2024 article from SoFi. They know what we're talking about here.
All right. So even if it's $1,100,
you're talking about people that are making $60,000 putting a fifth of that on credit cards. I think that's fine.
right? Even if it's $1,100 at 3%, they're getting back $396. So I guess if you're spending $800, I mean that just doesn't make sense to me because $800 for groceries in a month. And then we're saying that people are only putting another $300 on a credit card. That doesn't make sense.
Yeah, but that is, by the way, without adding on the benefits of everything else that comes for SoFi Plus, which now also you have to think they can ramp up those benefits if they're making $10 a month. Like, so, the new 5% cash back, you get 2% match on recurring IRA contributions and a 1% match on recurring deposits made through SoFi Invest. So those are all additional amounts. The amount of money that you're putting through, Steve, would absolutely pay that back. Plus 4.3% APY. You're getting, what else? You get $1,000 mortgage discount if you're a SoFi member. $400 equity loan discount. Like immediately, that's paying for multiple years if you take out one loan with SoFi. Discount rates on student loans, rate discounts for personal loans. You get all these random stuff like, preferred IPO access or 40% off CNBC Plus, stuff like that.
Dude, what is this target demographic, man? Like, can you please break out the user persona for me of somebody who's like, oh yeah, my biggest pain point is 5% on groceries, but I also want CNBC access and I want IPO access. Like, those are not the same person.
Can we get business banking and wealth management before we get this, please?
I swear to you, Tevis, I completely agree. Like they have a credit card for people who are trying to grow their credit, the Essentials card, but then they also have this card, which is a secured card, but it's for $120 a year. I don't think those two categories align. However, I've been proven wrong many times by SoFi, and I bet you they've done a lot more research than I have. And plus, I don't even know if it's 100% a secured card or if it's like a dynamic card. I don't know. I wish it was a revolving 5%. Have you seen? That's what Chime does. They're only offering like 1.5%, but the category changes, I think, like bi-weekly or monthly. So, you know, it'll be groceries at one point, or then it'll be, you know, bills and utilities or something like this. Like the categories change over time. Gas.
Can we talk about NVIDIA and AI?
Sure. That was enough SoFi talk for you, eh?
I just don't think there's anything to talk about with SoFi at this point.
Well, okay, let's just do this. What I'll do on the side here is I'll create the live stream for the after hours, and so that way we can share the link to the audience while we're in this show. I just need a topic for the after hours to get us started. So, do we want to do?
Dude, we're 30 something minutes away.
Yeah, I know.
I mean, Oracle and Broadcom were pretty big stories. I think we should go over that and discuss how the market took a dump. The bears are wrong. There's no structural damage to AI, and these valuations do not make sense for the greatest companies ever in the history of the not just American but global economy.
I think that you know, it definitely was a stark contrast seeing the growth that NVIDIA is able to put up, and then the growth that Palantir is able to put up, and then one is being priced at 420 times PE or 430, and then a company in a, you know, sort of benefiting from the same idea that AI is extremely bullish is getting 1/10 the multiple. I think that that's crazy. Not Broadcom and Oracle, but they are still in adjacent spaces. But I still think it's crazy that Palantir and NVIDIA can trade so differently.
Palantir is very overvalued. There's no question about that. There's a lot of companies that got nosebleed valuations, and that happens in every market. But unlike Palantir, there are companies like Oklo and SMR that did not make any sense. At least you can make some type of an argument for Palantir. The problem is that one thing went right and two things went wrong this week. You had a Fed that came out. We got really good economic data out of their report. You had a dovish Powell cut, and then you had Oracle add $15 billion in debt. Their free cash flow went more to the negative, and Citi analysts came out and said that they are now expected to add 20 to 30 billion in debt a year for the next 3 years for the build out. Then you got Broadcom coming out, and Hock Tan on the earnings call makes a comment about how maybe things are going to get delayed. Maybe they're not. So Oracle and Broadcom have nothing to do with NVIDIA, Microsoft, Amazon, Alphabet, Meta, nothing to do with them. I mean, if anything, Oracle's earnings call showed us that $592 billion in RPO. There is so much demand for their multi-cloud that this is a train that keeps on going. When you add that to Microsoft's, Amazon, and Alphabet, the RPO is over $1 trillion. Now, obviously, that's over a couple of years, probably several years, but that runway for chips is immense. And NVIDIA, if anything, should have been up on that earnings call. Yet it got taken down because the AI bears come out and want to try to make a narrative that they are so wrong on that why are we going to take the word of these bears that are shook of their own shadow over the greatest companies and the greatest CEOs in the history of business? I mean, if this was just Zuckerberg, keep going on the metaverse, I completely understand. But this is not. This is the best CEOs we have ever seen across the board in a segment that does not stop. It only innovates, and it is never stagnating. and we want to say that AI is a bubble, it is the most ridiculous thing I've heard in a year.
Yeah, it feels as though this market is just looking for reasons to sell stuff off. The fear and greed index, I mean, dipped back into fear territory. And every single week, the flimsiest excuses get big pullbacks across the board. I was just joking with Matt earlier today, like something OpenAI does drags all the public AI companies or the complementary AI companies down, and then that drags the wider market down. And I'm like, it's not even a public company. Like, it's just so fragile. And that's overall the feeling that I have about this market in general is, okay, really? Oracle now has the power to bring the whole market down? Really? Because it used to be where really only NVIDIA and like the Fab Five companies had the power to bring the market down. Now we're widening that to Oracle, and we're widening that to OpenAI, and we're widening that. And it's just like, this is fear, man. This is uncertainty around what is the future going to look like from that AI narrative. And to me, they seem holistically like buy the dip opportunities because the thesis is still intact over the long term. And so over the short term, I think it's just, we have to get through the earnings so that we can build a foundation. But I think there's still a lot of reverberations of the last pullback that we had in November, right? Like, I just feel like we're not even on steady footing right now from a market sentiment perspective.
What's it called? So, yeah, I do find that we're just getting sold off at any single turn. But Tevis, how are you sort of positioning your portfolio to take advantage of if AI just keeps trucking along and, you know, maybe there's bearish sentiment, but if you still believe in the trade, what are you buying?
I mean, Nebius is 18% of my portfolio. I bought Meta a couple weeks ago. I'm going to continue to buy Meta and maybe get back into NVIDIA. I think at these prices with what's coming out.
Dude, if I had your portfolio with no NVIDIA exposure, I think I would take out like a 5% stake today. Like, I don't see how that works out poorly for Tevis exclusively. I'm not talking to the rest of the audience, specifically Tevis.
Yeah, it's fairly in line. I mean, Steve really helped me with an allocation document because I mentioned to Steve offline that I was like, hey, I want to sort of restructure my portfolio a little bit and go more defensive stability. And believe it or not, like in the context of my portfolio, which is volatile AF, like Meta, Amazon, NVIDIA are stable. So that process is underway for me. And I'm starting to sell off some things, write aggressive covered calls to roll out of some things and get into some of the safer positions. And my hope is that in January or February at the latest, I'm going to have cornerstone positions in Meta and also in Amazon, and then a smaller allocation in NVIDIA, probably single digit percentages, like 4% to 5%.
But still extremely heavy in Nebius. By the way, I took an additional, or I bought a more Nebius today.
Good for you, man. I think so much is not priced into Nebius right now. It's ridiculous. And I mean, look, you weren't an investor at this point, Tanner, but when Nebius first dropped the Microsoft hyperscaler, partnership, the stock like jumped like $30, $40 off of that one single announcement. And that to me is a signal that so much is not priced in. All of this UA data center build out that we're seeing right now has not been officially announced on their PR page. It's not priced in. All of the subsidiary value that they're creating has not been priced in. Databricks is going to go public in 26, has not been priced in from a ClickHouse ownership perspective. Avride Uber partnership has not been priced in. The European build out where they said, hey, we're going to spend 20 billion euros on 5 gigafactories for AI build out. And Nebius is a European company, not priced in. So like there's such, and that's just like news over this week that I'm mentioning, right? there's so much disrespect, I think, that's going on, where Nebius shares in the losses from other AI companies, even though they had, like, the roadmap is looking great for them, but there's so much that's not priced in from the upside. And so I think it's just a great buying opportunity personally.
Are you touching any of these or this name, Steve?
What, Nebius?
Yeah.
No.
What do you think about some of the neoclouds?
Steve, I know you were thinking about Nebius. So where are you at in that process? Because you said it was looking interesting recently.
It was. I would like to see them go down, though.
To what
to
level
where?
and
I
why?
don't know. I don't know. There's just something about it where I'm more on the line at this point of what's going to be the easier play for me to make money. And when I say this, this is me, nobody else. But when I look at where Nvidia is trading and them putting up 65 billion next quarter, which there's no way they're not doing, and then getting China revenue back next year, and have Ruben come out and seeing what all the RPO numbers now that we see it out of Q3, you can make more in a CoreWeave or a Nebius. There's no question about that. But the easier money, in my opinion, is in NVIDIA. And I'm looking for easy money, not hard money at this point. And I don't think that if we get a downturn, NVIDIA goes down nearly as much as a CoreWeave or a Nebius. So I'd rather take the easy road and just be an NVIDIA, Amazon, Meta, Microsoft, because I just think that they're just going to keep getting bigger.
Sure. I mean, that's fair, but that's also a cop-out, dude, because you own like 50 positions and you are also exposed into riskier AI plays. So,
well, what riskier AI plays?
I mean, you tell me. I don't know your full
You
profile.
said, but no, but you're saying that I'm exposed to riskier AI plays. What are they?
Like,
Well,
I mean, not non-NVIDIA AI plays, right?
Well, like Salesforce, that's an absolute cash machine. That's
Don't
not.
do you own
No,
Oracle?
I mean,
Do I own Oracle? No.
Palantir could be on that list.
I thought you did.
Yeah, but I own Palantir at such a low number. It doesn't. Palantir could go to 80. It doesn't matter. It's still an 8x.
It does matter.
No, it doesn't. It's
You know
still
what?
an 8x.
I'm not a big fan of people saying this. The price that you could exit at, if it was to get cut in half, that is your risk.
Hold on. My average in Palantir is like 11.
That doesn't matter.
Yes, it does.
It does
It's
not
like
matter.
$11. If I don't want to sell because I think in 10 years it's going to be bigger and it goes down to 50, I'm still up 400%. I could give a shit.
Honestly, that argument doesn't make sense because the price you could exit out today.
But I don't want to exit out today.
I know, but let me get a sentence out.
I don't need to exit out today.
Let me get a sentence out. The market value that you have today is what you should be looking at. Your cost basis does not matter. Okay. Your market value, sorry, your book value does not matter. Your market value is what matters. If that gets cut in half, you are losing half of your market value. You could take that out today. So if you risk by saying, oh, you know what, I bought so many years ago. So like, that's like saying Warren Buffett, Coca-Cola could go down to $3 because I've held it since 1970s. No, dude, his value in Coca-Cola is what it's held to today. It cannot get cut in half. That would be devastation. At some point,
Palantir is likely, with the way that the market looks like it's going to go in the future, Palantir could become $1 trillion company for no reason.
I know, but dude, that's not what Tevis is saying. He's saying that is still a riskier name. It's got a 430 PE on it. So
I'm not saying the valuation makes sense. This company should be at 50 or 60 bucks. I'm the first one to say that. Okay. And I've continuously said that. But that doesn't mean that after it falls, if it falls, it isn't going to go back up at some point. And I still have such a small cost basis and long-term gains at that cost basis. It doesn't make sense for me to exit if I don't have to.
I think
all I'm trying to say is if you're doing risk adjusted, you're looking for risk adjusted returns. You can't say, oh, well, I know I'm holding on to a risky name, but that doesn't count because I bought it years ago.
So I think
when you have the type of profit margin I have built in, it's not risky.
So just to sort of jump in. I think what Tanner's trying to say, Steve, is like he's looking at the compound annual growth of the duration of time that you held it, and saying that, if I understand correctly, if Palantir cuts half or 70% of the value, or let's say a better example, if Coca-Cola goes back to $3 for Buffett, he doesn't make the 10,000% that he had holding it. He makes from his cost basis up to $3, and so from a
or every day that you look at your portfolio, or a lot of people do year-to-date returns. Like some people just set their portfolio at a certain time. That's how you need to be playing your portfolio. So although you might have bought an even lower, if you were to say, okay, well, I could sell that and go and buy something that is like Nebius, for example, that doesn't restart your risk. You're now potentially lowering your risk if you think that Nebius is a better play than Palantir. And I'm not saying it is, but just because you bought Palantir earlier doesn't make it less risky than Nebius.
So at the price I'm in at it, doesn't matter where it goes. There's an opportunity cost.
So, sure, Steve, I'm with you. I agree. I think what Tanner's trying to say is that if you didn't own Palantir and if you didn't own Nebius and if you just had the straight cash,
I'd probably buy Nebius right here.
That's what he's trying to say.
You should look at all your positions, even if you hold them.
No, because if I sell, I have to pay massive taxes. It's not worth it. You're not looking at it from how much my tax bill is going to be that leaves the account, when I can use my shares of Palantir for other things. There's other things that I don't want to say on this that I can use my shares for Palantir for, if you catch my drift.
That's fair.
And it's not just about what you're looking at it, and I promise you, you're wrong for several reasons that I will say in the after hours.
Anyways, all I'm saying is that Nebius at this price is a good.
It's interesting
reward for me. You can't say it's interesting and then say, I'm not buying it because of valuation, and then not have a price at which you would buy it, even though it's like ridiculously undervalued.
But the problem for me with Nebius is that they're not expected to generate any profitability until 2031. Now,
that has nothing to do. Yeah, by the way, I don't think that's true at all. But
I don't think that's true.
I'm just saying what the analysts are saying. That's the consensus.
Ooh, what analysts, Steve? Like, how can you still trust these analysts on the high beta names that they've been proven time and again to be drastically wrong on? If you were still trusting analysts on SoFi, you'd still think it's going to go to like $15 by now. Like, I will trust an analyst on Microsoft, and I'll trust an analyst on JP Morgan, and I'll trust an analyst on freaking Verizon or Coca-Cola. I will not trust an analyst on CoreWeave or Nebius or any of these names, because like the amount of growth that is built in and the amount of trust, execution-based trust that you have to have in management is something that the analysts don't index on at all in their numbers. So
it's all about the forward growth rate. And right now, I don't know.
He's about to pull up the analyst number.
They've raised every single quarter, Steve, and so they raised their projections to 7 to 9 billion ARR for 26, and they said over half of the year is already booked for them. And then on the other hand, they're now building all of these facilities, and management has said, we're not going to build if we don't have agreements on the other side of it. And so you have to ask yourself, okay, what agreements do they have that they're building for that they haven't announced yet? So like there's so much, man, in terms of, this is a $22 billion company. If you just look at their subsidiaries alone will be there's not like, what is it? Avride raised $375 million. Okay, that doesn't sound like a lot, but they just partnered with Uber. And they're actually doing real robotaxis.
Why do you like Nebius over CoreWeave?
I just like the vertical, like I like the full stack that they have for their business model. And I also like the exposure to the other verticals that they have through their subsidiaries. So those are two big reasons why I think Nebius is building a full end-to-end platform with Token Factory, with all of their offerings. And then you account the subsidiary value, which has zero respect from the market right now. Dude, if Databricks goes public at the valuation of over $100 billion and Nebius has a stake in ClickHouse, that stake alone is going to be like so much more relative to the small market cap that Nebius is currently going off of. It's only $22 billion market cap. And they have what, like 23%, 27% of ClickHouse, something like that. They have like 83% of Avrite. It's just ridiculous, man. Like, so it's a sum of the parts thing, except all the parts are hyperscaling right now, and the core business is as well.
Another thing I would, say like about their profitability. I always think it's weird with growth. Like I would not focus on the profitability, because if they wanted to be profitable tomorrow and just cut all future growth, then they would be profitable immediately. It's because they are growing at 700% that they're like, okay, well, we need to invest every dollar because we just have immediate capacity. And there was another comment in chat that I wanted to address where they said, they feel like half of these sort of hyperscaler deals and AI deals are potentially fake or are going to be canceled later on. I think Nebius is actually showing like the opposite of that. Like the $3 billion deal with Meta, they were like, the only reason why it was that small is because we just weren't confident that we could even offer them the capacity. So they're being like super conservative, and their depreciation's really conservative, and like just every part about them, I've just appreciated. And I think it's also, I don't know, the political nature or the way that they're growing in public markets, that they just don't want to overhype themselves. They're kind of doing the safe road every single time, which was the same feeling I got from SoFi early days. So yeah, I like Nebius here. And by the way, internal memos said that they're going to try to grow another 700% in 2026.
It's good. Like I saw a recent interview with Mark.
But how do you even compound that in your head? Like that is,
you can't, and especially now. Imagine now. So how do you compound that as Tanner, and then how do you compound that as a 57-year-old analyst who AI first came about when he was already in his 50s? Like they're just it's crazy to me, man. Like people just don't understand the expansion that this business is going to have, the multiple expansion. I was listening to an interview with Mark Boroditsky, their CRO, and he was like, our biggest thing right now is how do we say no to all of these people that want to do business with us in such a way where they'll want to do business with us a year from now or 2 years from now, because we just physically cannot fulfill all of that demand that we have.
Steven, I also just saw this comment.
CoreWeave's numbers look way better than Nebius's right now.
Yeah, CoreWeave's debt looks way worse, though.
It does look way worse.
So,
absolutely.
Where did the mustache go, brother?
Oh, I shaved it off a while ago.
No, Steve is not 57. That was just Tevis picking a random number of an analyst.
Correct.
Steve's a young buck. People don't realize it.
I'm trying to bring up their latest presentation.
Are you 43, Steve?
Yes.
Gotcha.
So
Solana versus
79 billion
Ethereum.
expected run rate at end of 26.
Jesus.
Tim Sweeney.
Thank you, Tim Sweeney.
With the $100 gifted, you guys are looking at the smart card all wrong. You don't compare a secured card with TAM of 120 million people with cards the people can't get. It's pay off an ecosystem, not a premium card, which should come later. Tim, if you want to come on and explain that, just in case I got that right, let me send you the link.
Yeah, send him a link if he wants to come on.
And thank you, Tim. It's very generous.
Guy is
He's the best.
loaded in SoFi shares, and he doesn't want you to disparage this name. And we do get many things wrong. Okay, I sent Tim a link. Let's see if he can jump on. However, based on the SoFi donation, he might be a little behind on the stream. So I wonder if he's even going to see my invitation. We'll see.
I think you need to let me rephrase. I would love for you to do some more homework on Nebius, Steve, because I want to be in this name with you, man. And
I'm
and
thinking about buying both Nebius and CoreWeave actually,
Both.
because I can't tell which one's going to do better, and I think they're both going to have staying power.
Mhm.
And the debt is a lot, but I don't think it's necessarily going to matter, because if Verizon and AT&T, and these are bad examples, because Verizon does 50 billion of EBITDA, so obviously they can afford a $6 billion a year interest payment on that debt. But with the amount of demand that we're seeing with over $1 trillion in RPO from just 4 companies, okay, there is so much demand for data centers that either Nebius or CoreWeave is going to win, or both of them are going to win. So I think I would rather hedge my bet, not going all in on one of them and splitting it between the two of them, because I really don't know which one's going to do better. And I do want some exposure to the neo clouds, not just the hyperscalers. I do want to go one vertical down. And it's been really hard to differentiate which one has more potential. And I think the fact that CoreWeave is going to be profitable quicker, for me, I like that.
Yeah, what I'll say on CoreWeave is like they have a lot of customer concentration. They're basically like a massive integrator. I like the fact that Nebius has the full stack advantage. I mean, they build their own cloud infrastructure from the ground up. They have their proprietary, racks. They have the software layer for handling the AI workloads.
Oh, Tevis, just stop. I know why you like Nebius. I just looked at the option chain.
Well, like CoreWeave is going to have it too, man.
Holy shit!
They're incredibly high beta.
Jonathan Price said, Steve, I'm 7% in Nebius and 15% in CoreWeave in my portfolio because I was thinking the same thing. I will be trimming some of the others to get more Nebius.
Yeah, look, I think they're both going to do good. And when you look at what we heard in Q3 from all these companies, AI is absolutely real. It's just going to get bigger, and we can't get enough support from a data center perspective. It's hard for me to pick a winner. That's why I own a bunch of things that are adjacent to each other. Because is there room for Microsoft, Alphabet, and Amazon to win? Of course. So there's probably room for CoreWeave and Nebius to win. I don't think it's going to be a one company takes all. And I think instead of me trying to pin it down and figure out which one to buy, I should just buy both. Because even if these are volatile, I can just get more shares in the future at a cheaper price.
So just before we wrap up, we are being joined by the great and powerful Timothy Sweeney, who's going to give us his opinions on SoFi Smart Card. Tim, thank you so much for joining us.
What's going on?
Hey, you guys are killing me, really.
Did you donate $100 to get that point across?
You know what? I almost donated 1,000, but I didn't think that if one of you guys would have got this, I would have donated 1,000. But that's this card is a great card for people who can't get a credit card and are using a debit card, like poor people, of which none of you seem like you've ever been poor, because poor people get it. Right? And my DMs, and people go, oh my God, I'm going to love to do it. And everybody else looks at it and goes, well, it's not a card I get. Well, yeah, it's not going to be your primary card, but there's 120 million people. Now, this goes against SoFi's high earner things, but it's part of an ecosystem where it can teach people how to learn to use the card by having the dynamic funding, and they get 5% off groceries. I'll give you a couple examples. My son's disabled. I am a Social Security payee representative. It's hard for me to keep track of his spending, other things. It's good to have this kind of card because all he buys is groceries with his money, because you got to report that to the Social Security and they like to see what you're doing. And I can track that with Relay. My brother doesn't have a lot of money. Maybe say he has 100 grand. He throws 100 grand in his savings. He gets the extra boost. The extra boost pays for the card. He's not going to invest the money. He has credit cards and he gets a 0% credit card, but he buys groceries and he has that. That's a good card for him. It would be a good card for anybody else if they just want to get the 5% on groceries. Is there a better card for groceries? Yeah, there's a better card for groceries. But part of me is there's some people who will just use it for groceries at 5%. Because you get an American Express card that has 6% on groceries and you pay a $100 fee, but maybe you can't get that card. And so it's unfair to compare it with, say, okay, Hood's card gives me 3%. Yeah, okay. Somebody who can't get a credit card is going to get in line for after the other million people in a Hood card and get a Hood card. This is part of an ecosystem. Now, did they communicate it correctly? I don't think they communicated it right. I think the rollouts could be communicated a little bit better. They could have had a chart. And what they did is the only thing they really did for the people who are getting direct deposit is you take away the access to IPOs and the 10% on the 2% credit card. But eventually you're going to have a premium card. They have to have a premium card. That premium card could be tied to your invest account, which would make it secure. It also would make any loan you got with them secured by that a tax-deductible investment interest. Plus, the way they set their margin rates, even then they said they lowered them, they're still not competitive. So to get a competitive margin rate, you issue a premium card where if you sign up for the premium card, you get 1.5% off all those margin rates. And there's a lot of things they could do by structuring that fee so it goes down with the amount of your assets that you have in invest. So then if you only have the 2% card, you go, I'm going to pay for this other card, put most of my assets there, and then I get the fee kind of waived. Plus, you'll get the 1% and 2% or maybe a boost on those as a premium card. Now, if you look at it like, oh, this is their premium card offering, or the premium card offering is a 2%, I agree. It kind of looks stupid. But I don't think that's the way they go. Like they said, they're going to be conservative in rolling out credit cards. Because if you get a premium card like Robinhood's card and you have 3%, you get somebody like me who charges $8,000 or $10,000 a month on your credit cards, and you're giving 3%. That's a $3,000 or $4,000 you're giving the card holder every year, maybe a couple thousand over any kind of interchange you're going to get, and that's going to be terrible for you. And that's why you hold off. And if you look at Robinhood, I'll bet they look through the people they get. Certain people that they like, they'll give the card to, but the other people, they'll just, you don't know what their underwriting is, but maybe they're just looking at the amount of assets they put on their platform. That's a good idea. That's the idea I suggested for Robinhood like 2 years ago. I said, you got to do this card. You got to look at the assets of the platform. So I think you guys are looking at it all wrong by comparing it to other cards, because that market is huge.
So Tim, I don't think that the gold credit card would be my comparison, but there are other secured cards that don't cost $10 a month.
Right.
And those are the ones that I think are worth comparing. That the quote unquote poor people, it would be a hard stretch for them to get back into these, like the whole reason why they broke up with the big banks were to escape the fees. And now they're sort of remaking this connection.
Yeah, I understand that argument. And so tell me the secured card, because I know Bank of America has a secured card, but Bank of America is not giving you interest on your savings account. And if you teach these people the right way to use this, nobody. I have a shit ton of money. I don't have anything in my SoFi checking account. When I want to write a check or pay out of the checking account, I take it out of savings. All my money is transferred savings account. You can transfer it in an instant. And so
my counter would be Chime would be the big secured card competitor, and the APY would not be a benefit to people with no savings. They're living paycheck to paycheck anyway.
Yeah, that's true, but a lot of times they do have savings, right? They might have 1,000 that they keep for a rainy day, or 2,000 for a rainy day, and you're not getting any interest on that. And does Chime give you free checks? You have the bank accounts with Chime, or it's just a credit card? I mean, it's a part of an ecosystem where you train people that are, the reason I'm so in favor of this is, I came from a pretty poor family, and my family doesn't manage money well. And when I sit over them and say, my brother, I sit over and said, like, do this, 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 this. And when they finally listen to me, they figure out how to manage money. And it's a good card to keep them, have them find out that they have a credit card from a bank, and they learn how to manage their money, and they get some interest. Some of the other things, but from a student, but you're not looking at the whole population. What if you're a student and you get the discount on the student loan? Or what if you get and you're going to get a student loan anyway? I always suggest that they wrap them up together and just waive their fee for a year or two if they get a student loan, just because they could easily do that. So I think it's developing. I mean, I hear what you're saying about some of the other cards, but I don't know if the Chime card, does that give you 5% off on groceries, or do you get anything on the debit cards?
They have a a secured card that gives you, I think, 1.5% on a rolling category. So sometimes it'll be gas, sometimes it'll be groceries, sometimes it'll be, other things.
That's a lot of work for me. Right? That's a lot of work for me. I'd rather have, even me, I'd rather have the 5% card. I don't buy groceries because my wife does. I'll just give it to my wife and say, use this every time you buy groceries.
It's not a big, I agree with you. It's definitely less impactful than SoFi's, like it, having to keep up with all the categories, but it also is not $120 a year.
Yeah, that's true.
After they do the soft,
but if you can pay for it, it doesn't matter, right? If you can pay for it, it doesn't matter. If you can pay for it out of the savings, people are you're not gonna have the best card out of the whole ecosystem in every category compared to every other card. It's just not gonna work that way. And as a shareholder, you got to figure out what's the best way to hit the people you want and make money. So, students, people just right out of school. I mean, it would have been a much better card if they added restaurants to it, but I think then it doesn't make it profitable. I mean, I've had a lot of DMs of people saying like, oh, well, why don't they just give me this in the 2% card? And why don't, I want this and I want that. I mean, everybody wants stuff and everybody looks at things through their own perspective. But if you look at it through a business perspective, you got to see what's a good card that can get you don't need 120 million of those people. If you get 10 million that are willing to pay it because they buy, this thing that people only buy $500 groceries is kind of nonsense. I mean, people buy $1,000 of the groceries. And if you're a poorer person, you don't get to eat out that much. So you buy more groceries. And so you spend more money on groceries. So that's the category you need if you're poor, because you buy rent and groceries and you don't have money for much else. You're never going to get this stuff to be in a Costco card or Sam's or somewhere else card, because here's the thing. You can categorize this stuff as groceries on your thing, but they make so many mistakes on this stuff. I used to represent Vons, and we had and a couple other grocery stores that big audits. They can't eat. They have make so many errors, like with regard to how they tag individual items as it is taxable versus non-taxable for sales tax purposes. So you can't really count on them. So pretty much they just count on the overall category that those companies have for their credit cards. And I don't think Walmart or Costco is a grocery store category, to tell you the truth. I think that's how it works.
Yeah.
But it's not going to be. It's like there's several people who would come to me and say, "Should I get this card?" I go, "Probably not. It doesn't help you, but it does help X." So you're not trying to find a card that's uniformly going to get to everybody. Why is Chase such a great lead on credit cards? Because they offer so many alternatives to people who will use them, and so that's why they have so many cards. I don't think SoFi can go that route. I think they have to have an ecosystem of like 4 cards. I think they've got to get rid of the Essentials card, because I don't see what that does. It has no rewards, right? Yeah. So that you start with the Smart card, and then you give these people incentives to go up to the Everyday card. Or remember, they now waive that, so you can have the Everyday card and the grocery card, or you can have the 2% card and the grocery card. So it's not like they used to, where they forced you into having only one card and you go, this is the card I'm going to pick, because you're definitely, that's the only credit card you're going to get and you're making money. You're never going to pick that card, right? Because I don't even buy the groceries. I'd never use the card. But I get my wife will use it. She'll use it in groceries.
Let's because we're already past time now. But
yeah,
Tim, I'm curious if potentially you either have time this weekend or, during the week or something like this, where we can do a SoFi dedicated conversation. I'd like to do another long talk, but we just got you in at the end of the show, which is honestly bad. Poor planning on my part. I should have sent your invite a long time ago. But do you have any extra time? Because we're a little past.
Yeah, I have some time. I'm just sitting home. I just got out of the pool, actually.
Okay, so why don't I set something up? If Steve wants to be a part of it, Tevis, I'm sure, does also want to be a part of it as well. We can set up another podcast specifically to talk SoFi.
Yeah, that's fine. That's fine.
Okay.
I mean, that's the only thing I had to say, really. So, but if you want to set it up, I'll
there's been a lot of new updates, and I want to pick your brain on all the different things, crypto and everything. So, but let's jump into the after hour show. Steve, Tevis, do you guys have any last words before we jump over?
No, thank you, Tim, for
being here.
No, I don't know how you guys split that money up, but
yeah, Tevis.
Yeah.
Well, that'd require Tanner actually coming to Toronto, Tim. for me to actually buy him dinner or drinks or anything in between.
No, I have e-transfer. It's all good.
Oh,
Hey, if you had SoFi, you could transfer it instantly.
It's true. Well, tell them to come to Canada. You might have better connections than me.
All right, guys.
Thanks, Tim.
Thanks,
All right.
man.
Thanks, Steve. Travis, bye.
Ladies and gentlemen, that's been us on the FinTech Frenzy. I think we're going to be continuing a lot of the AI talk, and BM&R especially is another one that I wanted to touch on. So if you guys are a member, have been lucky enough to catch one from Jonathan, or if you want to join, you can hit the join button down below. But bye for now.